silver, precious metals, Freeport, McMoran, copper, and gold is, I think, a good one, partly because they have some exposure to developments that are going on in China. BHP Billington is another favorite. These are all what I consider solid stocks that if I'm investing, I'm going to be looking at these kinds of stocks and not necessarily, at some fly-by-night types of stock. I'm going to stick with the better ones. Barrick Gold, while gold has made new record highs, Barrick still has a little ways to go. But Barrick is kind of one of those things that, where you have a situation where it moves to a high and you buy higher if you're a believer in the idea that gold is kind of an indicator of what is going on in the world economic scene today. How about this one? British Petroleum. And no need to talk very much about what has gone on with British Petroleum and the Gulf oil incident at a low, way down, probably not seen for perhaps 4 or 5 years. And so is British Petroleum a good buy or not? I think probably the jury's a little bit out on that one yet. Then we have ExxonMobil. ExxonMobil, for me, is one of the favorites because it has been at a low. You may recall in, I think it was in the October of 2008, it hit a low of 56.50, lowest it's been in quite a while. But ExxonMobil is a company that is reputed, it's one of the largest in the world. It's reputed to have great management. It has a pretty good story for it going. It's done a lot of developments in the expansion areas such as natural gas, which I think is good, oil shale, which I think is good in view of the fact that, the government, U.S. government may come up with some restrictions on drilling for, the offshore drilling type of regulations that may come about. ExxonMobil is one of those that has some alternatives. Also, the drilling that may be done off the coast of, for example, Brazil. They may not have the same kinds of rules, but there are a lot of things that I think ExxonMobil, because of the stretch of its investment area and its geographic dominance, is, to me, a pretty good stock and pretty good potential. Oil is also going to, be in demand unless you give up on the economy totally. We have China coming along, always wanting more oil and trying to move away from coal. They're going to be looking more at nuclear. They're going to be looking at oil. They're going to be looking at natural gas, all those kinds of things. Recently, they have talked about making the yuan more flexible arrangement in connection with the dollar. And with that, there should be, because their yuan will be stronger, it should be able to make it possible for them to buy more energy or more grain or whatever it is, should help commodities in general. Of course, on the other hand, that's going to probably price their goods a little higher. So what the upshot of that whole development will be still remains to be seen. It looks to me like ExxonMobil is one of those stocks that has come way back down to a low after being at a high, has had a rough May, as some other stocks did, dropped down $10 during that period of time to a low. If ExxonMobil drops through that low, that may not make any difference as far as the whole stock market is concerned. We may have bigger problems than just having ExxonMobil drop down there. Now we're going to look at ExxonMobil in a little bit more detail to show you the vantage point indicators that we would use, mostly in terms of what kind of timing are we talking about and when would we get on board and how would we get on board a stock such as ExxonMobil. And I've cut this longer-term chart down to a 3-month chart for ExxonMobil just to illustrate some of the indicators. We'll put some of the indicators on the screen and then we'll talk about them a little bit further. The first indicator that I'm putting on here is going to be the predicted medium-term moving average, and crossover studies that we have with the Vantage Point software. We have the blue line there is the predicted medium-term moving average, and then you have the actual medium-term moving average, the black line. When you see the crossovers, that is an indication that something is changing. The trend is changing, the direction is shifting, and it is time to get in line with where that blue line is going and try to determine at what point will you get on board this move to take advantage of that trend. As you can see on the hard right edge, it has kind of gotten into a position where it kind of has waffled back and forth lately. So we'll talk a little bit more about how to use another specific indicator to handle that. So when it comes to the predicted moving average, you're looking, number one, the trend. Which way is it pointed? That's the way you want to be in the market. And then secondly, you want to look at those crossover situations for changes in direction as a clue at what point you should be acting. Now, Vantage Point has several different types of moving average. We'll take a look at another one just to give you an indication, and that is called the triple crossover. A triple crossover is 3 moving averages. These are all exponential moving averages, where you have the red line being the shortest one, 3-day, and then you have a light blue one there that you see there. That's an 8-day exponential moving average, a medium term, and then the longer one, the darker blue line, being the 18-day exponential moving average. Again, like most moving average studies, you're looking at the angle, the direction. If you're just looking at a long-term plan, you might say, okay, I'm going to just stick with that dark blue line, and wherever it goes and the angle it shapes, that's what I'm going to be trading in that direction. And that is a possibility. Whenever there's a crossover of that with either price or a shorter moving average, that's the direction you want to be. But this is available. It's one of the moving average combinations that Vantage Point offers based upon studies that have indicated that these 3 moving averages are the best combination that works together to indicate some of the short-term market trends. We're also going to take that away now, and we're going to bring back our medium-term moving average, because we have a lot of other things on the screen. If we get too many things on the screen, it'll be too confusing. And we're going to add another indicator. On the bottom, you'll see the Neuro Index. The Neuro Index, it is a comparison of 2 3-day moving averages, a predicted and an actual moving average. And what this comparison does by studying that, it will determine, forecast whether the typical price will be higher or lower in 2 days. If it indicates the price will be higher, it will give you a reading of 1. 1 is bullish. That means, of course, that you'd like to be, if you're particularly getting into a trade, trying to find a spot, that's the point at which you want to be in, because it is going to be moving up in the next couple of days according to this forecast. Their other reading is bearish. That's the 0 reading at the bottom. It can stay bearish for some time, and sometimes you look at that when you're getting in or out of a market. Other times when you're on a trend, you're going to stick with what you see on the trend and not pay as much attention to the Neuro Index, because it isn't as